Is Bitcoin about to crash, or is Bitcoin about to have a big bounce, or even another leg up, like a blow off top? What is the most important indicator of them all? People have danced around this. A lot of people look at on-chain metrics. They have this realized price versus whatever price, market price, and they have the sulfur indicator, or the blue ribbon, or the rainbow ribbon indicator, whatever. The one indicator that everybody misses, that nobody talks about, is the most obvious indicator in the world. It's right there. It's right there. No one likes to talk about it because they don't want to admit the uncomfortable truth. I'm going to tell you what it is today. Let me just show you guys what it is. Do you see that? This purple, that's the price of Bitcoin. And this pretty much, let me do this. It's been correlating for a long time, right? It's been correlating for a long time. So let me just say, what's this blue line and what's this purple line? They've basically just been, and by the way, this is Bitcoin on logarithm, and these are on natural charts. This has pretty much determined the price of Bitcoin and the direction, the top and the bottoms of Bitcoin for the last 7, 8, 10 years, right? And in Bitcoin history, it's an inescapable conclusion, and yet people choose to ignore it because of some, a bullcrap theory that Bitcoin maxis have. Should you, if this was the top, I'm not saying it is, but if this was 109K was the top and Bitcoin goes down into a big bear market, should you hold Bitcoin? Should you hold Bitcoin for the long term? I have the perfect answer for you, backed up by data. Okay, here we go. This is going to be an action-packed episode. You're going to learn something really important from this episode about Bitcoin and about altcoins and what's going to happen next. Before we go there, let's just answer the question of which crypto exchange does Pablo use? Well, Pablo uses a crypto exchange that's non-KYC. That means you do not have to, right? You do not have to do KYC. You do not have to show them your ID. That means no one can see you. That means the IRS can't see you, the tax office can't see you, the CIA, FBI, nobody can see you, totally private. And chance to win a Tesla Model 3 or a Rolex, because I like them so much, I made a deal with them, limited time only. In like 3 days, this ends. So of course, if you're watching this video in YouTube, then the link is in the description below. But if you're watching this on some other platform such as TikTok, then basically go to my homepage, my my profile page, and it's on the Stan link right there. Basically, first thing that comes up on the Stan link. Okay, so by the way, it's only on this Pablo link. The deal is only on the Pablo link. Okay, here we go. Now, without further ado, I'm going to tell you guys what this this blue and purple line is. Can we see here, right here? What does that say? The SPY and QQQ. And this should be really simple for folks who trade stocks. This is basically, SPY means the SP 500 ETF, and QQQ means the NASDAQ ETF, right? When they bottom, right, this is like 2020. Let me just see if I can enlarge that. When they bottomed, that's when when crypto bottomed. Maybe I can go back even further. Oh yeah, let's go back even further. When they were bouncing, Bitcoin was bouncing. This was 2018. When they crashed, Bitcoin crashed. When when they topped, Bitcoin topped. When they crashed in March 2020, Bitcoin topped. When they topped in like December, January 2021, Bitcoin topped, right? When they bottomed in this is like October, November 2022, Bitcoin bottomed, right? And now when they're dumping, they're definitely dumping last few months, then Bitcoin has been dumping, right? So what does that tell us? That tells us basically there's a correlation, strong correlation between these three: SPY, QQQ, and Bitcoin. So then Bitcoin's not so independent from the stock market, is it? And now people will say, oh, maybe Bitcoin leads the move. Maybe the stock indexes are following Bitcoin. Okay, sure. Do you know how big those stock indexes are? They're like the SPY is something like SP 500, something like $30 trillion, $30 to $40 trillion. It's easily in the 40s, maybe even $50 trillion. How big is Bitcoin? It's under $2 trillion. So in other words, they're about 25 to 30x larger than Bitcoin. When something like that moves, when it's basically the SP 500 is basically the thing that every country invests in for their retirement. I don't care if you live in Norway or China or Japan or Australia or the UK, they all invest in the SP 500 companies for their retirement. It's so much money. It's literally so much money. When that thing moves, everything else moves. The only thing bigger than that is the US bond market, right? So it makes sense that when this behemoth giant moves, goes up into a bull run, Bitcoin follows into a bull run. When it crashes, Bitcoin crashes. So far for the last, I've shown you guys the last 6-7 years, it's more like 8 years. There's no argument against that, right? So what is important right now is basically where is the U.S. stock market heading to next? Well, folks might remember this. Let's have a look at this chart. This is the largest stock in the world right now, largest in the US, largest in the world right now. And let me just hide these two indexes. And this is on a daily chart. And this is NVIDIA. NVIDIA is the chip company that makes the GPUs that is used for all the AI that's been the Magnificent Seven stocks have been doing in the US. That includes Tesla, Meta, Google, Microsoft, Amazon, all those companies. And this was the orange path was the path I had drawn out for a crash in NVIDIA. If NVIDIA crashes, then that means this whole AI narrative is over. And the bounces and the moves are much more exaggerated than what I had drawn. What caused this? For folks who are in my Discord, right, they should know this very well. What caused this was basically the DeepSeek moment. Basically, China had come up with their own AI model and showed that previously the entire world bought these AI coins in the United States because they thought, okay, it's a monopoly. It's a monopoly where you could only buy these 5 to 7 stocks in the United States, and stocks like Facebook, Meta, Microsoft, Google, Amazon, Tesla, they control the future with AI. And doesn't matter how high the price is, nothing is too high for them. That's just a price you have to pay. And then they realized, oh wow, DeepSeek came out, and 2 days ago, another Chinese AI agent came out. It's called Manus, MANUS. Not as groundbreaking as DeepSeek, but it's still the leading AI agent in the world right now. So people are suddenly realizing, oh, there's a peer competitor to this whole AI narrative in China. So US doesn't have a monopoly on all of this. No, why do we pay such a high price, right, for these expensive US stocks? So that's why some money has been flowing out of the US and going to China. That's why you see the Chinese stocks taking off as well. If you guys want to see a chart, I can show you guys what's happening. This, for example, is the Hong Kong Tech Index, right? And it's just been going up and up recently. This is the Hong Kong Stock Index, which represents all the Chinese stocks. That was the chart that I had drawn out on how this would play out. Back in October, I had drawn this chart, and it's superseded my expectations. It's already like there was hardly a pullback here, and it's just gone up and up. So, so now the question is, what happens from here now onwards? Now, what happens is this. As I've shown you guys, right now, the amount of fear in the market has reached extreme levels. We're seeing extreme fears in the Greed and Fear Index and also in the AAII Bull Bear Spread Index. What this means is basically we take the amount of bulls in the market who are bullish and take the amount of bears and we subtract. Let me just lean out so you guys can see this. We subtract the difference, and the difference has hit something like 40%. 40% difference. So it's like this. Yeah, 40% difference. There are 40% more bears in the market than bulls. So it's like maybe in the market we're like 60% bearish and 20%, bullish. And it was the rest of the folks saying we go sideways. So that's a 40% difference. This is as bad as 2022 in the markets, right? So in the stock market, they are as bearish as 2022. What does 2022 look like? 2022 looks like this. Let me just show you. NASDAQ, QQQ, NASDAQ 100. 2022 was this. It was a bear market. The NASDAQ had gone down something like 23, 24%. From here down to there, it was a bear market, right? And then it was down 22%. Right now, we're still here. We haven't even broken the rising trend yet. We're still within the trend support and people are like freaking out. So last time we saw markets this bearish, people were this scared, was down here, right? After like a real bear market, 22, 23% drop. This time, it's only like, we haven't even broken the rising trend line yet. Let me just see. Let me put that on regular. Yeah, we haven't even broken the rising trend line yet, and people are as scared as in a real bear market. So that doesn't add up for me. Let me show you guys another chart. Okay, another chart I will show you is the AAII bears, percentage of bears. Like I said, 62%, right, of people are bearish right now in the survey, and that is the red bar. Sorry, the red. Yeah, 60% people are bearish. That's the red bar, right? And the blue line is actually the SP 500. So we now have people. Look at the last time when people were this bearish, like 60% bearish is like, this is the highest since 2022. I'm sure I can find a longer term chart, and I saw that this was like the 7th highest in the last 20 years or something. So it's extreme. When the market is this fearful, right? Like this is May 2022, we were already near a bottom of a bear market. This is a small bear market, but once it goes down 20%, it's qualified as a bear market. And here, another spike, right? And this was literally the dead bottom in October, September of the bear market. And the market here right now, when we're barely had a dip, this is like a 6% drop, not a 22% drop. Anything that goes over 20% is counted as a bear market. We're only down 6% here, and the market is panicking. So that's why I don't think this was the top for the market. I could be wrong, not financial advice. This is only for educational purposes. None of this is financial advice. But in my opinion, we get another bounce up because the market's too fearful when we're all still at such a high place. The whales that are stuck inside an NVIDIA, they never had a chance to sail. The whales who are stuck inside Tesla, who are stuck inside Meta, Google, Microsoft, Amazon, they need exit liquidity. So they need to pump the market up again through, super influencers like Jim Cramer, like all of those talk show heads, like even Elon Musk, right? Like Sam Altman, pump up the whole AI narrative again, and basically sell on a high. I think the chance of a big bounce is high. Even a blow off top to a new all-time high can still easily happen. Easily happen. If that did happen, then Bitcoin would have a big bounce. My opinion is that Bitcoin would, it hasn't changed for the last 2 weeks. As soon as it broke down from 92K, 91K, I said, look, we're headed for 73K. So far, we've hit 78K, which was a conservative target for me because I was like, okay, well, 75 to 80K, that was my target for my Discord. We hit 78K. And realistically, it's probably something like 73K. No guarantees will get down there. I'm just dollar cost averaging in, buying some as it's dipping. So low 70s. And for ETH, if Bitcoin got to low 70s, then ETH probably goes to 1700, and both will bounce. And I think it would be a massive bounce, if not even a new all-time high for Bitcoin. Okay, and for all the Aussies watching this, Pablo uses SwiftX, which is a great on and off ramp. The link is in the description below. Thank you, folks. I'll catch you for the next episode.